Okay, peeps, welcome back. So today we're going to be going over the Grayscale trusts, and we're also going to go over a few other metrics just to show you guys some other stuff that's going on. So with that being said, let's get it. Okay, so first things first, if you guys think we are not feeling the pain today, we are absolutely feeling the pain. You can see the bloodbath that is taking place in the markets today. Again, the Fed is supposed to speak today and tomorrow. I believe J Powell is probably going to speak tomorrow because that's usually when it happens is on a Wednesday. It doesn't ever happen on a Tuesday as far as I can remember, but you can see a pretty nice juicy pullback in a lot of these different positions that we have. So not great, but we made $400 in options premiums this morning, so not too worried about it. Built up some cash to kind of offset the downturn of the markets. So here's one of the more important things I want to point out to you guys. So the NASDAQ itself, whoops, I didn't mean to do that. Okay, hold on one second. Let me refresh this. I don't know what the hell just happened there. Okay, sorry about that. So you can see we got the death cross on the MACD and on the RSI. We were getting pretty overbought. I mean, it really didn't not make sense to get a pullback, and we are kind of entering into that bearish seasonality. I mean, we've seen this before. We saw it back in July of last year, and we had a bit of a pullback here in March. March tends to be a little bit more bearish in terms of the price action. You can see February, March timeframe back here of last year also did kind of have that sell-off period. So it shouldn't really come as a shock. The other thing I want to point out here is that this is not even a correction. Well, it's almost a correction. So correction is defined as 10% or more from the all-time highs. This is not 10% or more. We are getting close to the bottom of this rising broadening wedge, which we did see happen 2 times before. Each time we got a bounce. So unless the Fed comes out and says something really bad tomorrow, I suspect we're probably going to get a bounce off the bottom of this channel. Again, the top of the channel as of right now is sitting at all-time highs at about 22,100. However, if we get a sell-off with a weekly close below this trend line, which I suspect is probably going to happen either today or tomorrow, if it does, earnings have been pretty good, so that's not too much of a worry. I think more just kind of sits on the laurels of the Fed and what they want to do. The markets are anticipating no rate cut as of this month, but probably beginning in September. So to my understanding, I don't really know why the markets are selling off. I think maybe they're just kind of prematurely overreacting. Again, Tesla and I can't remember who the other one was, but Tesla and somebody else had bad earnings. So the markets didn't like that too much, and we're kind of seeing what's going on with that now. I do want to point out, like in the worst case scenario, if we were to get a serious pullback, like a big one, like let's say even enter bear market territory, it's probably going to bounce off this green box. Okay. So the green box was previous resistance. Again, you guys know how this works. This is known as a flip zone. It technically never really tested that flip zone. So worst case scenario, this thing goes down to 18,000, and I don't know why it keeps doing that. So worst case scenario goes down to 16,000, and then we get some kind of bounce from there. But I don't see that happening. I mean, it'll retest this red EMA before it does that, and we also have the 200-week moving average, which we look at once a month. So the other thing I want to point out here is that the 2-10-year is just roughly about 20 percentage points spread away. If you want to be exact, it's 21 percentage point spread. So there is that. When that inverts, we have to wait and watch and see what happens. History does support a sell-off when that happens. With the S&P, this is a little bit more concerning. You guys can see that these lines are drawn in nearly perfectly, and it does look like it's wanting to sell out of here. So let's hope that we do get some kind of push up and maybe a hammer candle or something like that, close back within the channel and then move up. Again, the top of the channel is at almost 6,000. So the reason I mention these things is because, if stocks in general have some kind of crash, which I'm not saying they are. I don't think they will. But if they do, it will most likely have some kind of negative impact on crypto. Again, when the pandemic happened, the stock market went down like 30 to 40%, and Bitcoin went down 60%. Okay. It dropped from 13,000 to 3,000. So, or whatever it was at the time, 10,000 to 3,000. I don't remember exactly. You know what? Let's actually take a look at that. So, I know this is about Grayscale, but I just do want to show you guys this as a possibility. It doesn't look like much after we saw the bull run in 2021, but at the time it was pretty terrifying for most people to really try to wrap their heads around. So yeah, at Bitcoin's previous peak back then, roughly about 10,500, this thing got slammed into the floor down to about 3,800. You can see the massive, just obscene drop we had here, black swan event, and minus 95% on, or minus 64 to 65% on Bitcoin. And of course, you already know alts probably went down much more than that. So, but looking back in history, it looks like a blip. That's usually how it goes with crypto. So the other thing I want to point out is we're still trying to break out of this bull flag. It looked like we were going to get it, but then now it's not happening. So, I mean, if it doesn't, we just continue to consolidate until we break out. It's a bullish pattern. So there's not much else I can say about that. So LTCN, it does appear that we are wanting to pull out of this ascending triangle. It's a very low probability setup, but again, the circumstances are unique here. So 1320 to 15 at support at this time, especially if we get a weekly close below the trend line. We'll look at the daily real quick just to kind of gauge if that is actually confirmed. It is not confirmed, so we would need to see a close today below this trend line for me to officially be able to say that likely this thing is going to come down to support, but I suspect it is going to come down to support. I don't think this thing is going to get some kind of squeeze right at the end of the day. Of course, I'd be happy to be wrong. I mean, we all want to make money, right? So anyways, the resistance up here, 25 to about 27, and then the swing high is at 54. So assuming we get some kind of pullback here, I'll just give you guys the risk here. It's a little hard to see, but it is a lot. So 25%. So from down there all the way up to the resistance zone, it then becomes 100% and roughly about 300% move. So BCHG, this thing is still getting held down by resistance. So at this point, I'm going to probably say that likely it is going to come back down to support. If the market continues to sell off as a whole, I suspect that probably is going to happen. So $7 to about $8. You're looking at 1030 to about 1280 as on resistance there, 18 to 20, and then roughly about 24 at the highs. So the gain on this would be roughly about 76%, 178%, and 228% respectively. HZEN, let me get rid of these fibs real quick. This was for the Fibonacci retracement videos that I did for y'all. So we're still within the falling wedge. Again, that's a bullish pattern. The target is the top of the wedge, so that's 1050. And we're sitting on support, so pretty cheap, pretty good area to buy. You guys can do what you want with that. So 380 to 420 here on support. The breakout point for the wedge is going to be right around $6.50, and then you have 7 to 8 on resistance, and then 10.5, of course, which is the swing high and also the wedge target. So from the current price to the first target, 86%, and then to the second target, roughly about 145% move. ETCG, we do have the trading of the spot Ether ETFs. Again, it usually does take a couple of weeks, or at least that was what happened in Bitcoin's case. It took a couple of weeks of trading. There was a slight sell-off, and then the market started ripping after that. So if the Fed comes out tomorrow and says, oh, well, everything looks good, guys, inflation's looking really good, and we're more confident in our long-term downtrend to 2%, or whatever terminology they use, and basically it sounds like they're going to be dovish and the market likes it, then I suspect that we might get a turnaround in the trading of Ethereum and Ethereum related products pretty quickly in the future. So I don't think it will be much longer if that's the case. So ETCG, let take a look at this line real quick on the daily because I'm not sure if this thing has even had a confirmation below the bottom of that channel. Yes, it has. Right there and right here. So it did close below those two white lines on the channel. So I'm going to go ahead and say that $8.70 to $10 is going to be support. And then you have 13 to roughly about, well, we'll just call that $16. Nice round numbers. It's easy to remember. So $17.60 to about $20 as the top resistance target there. So we'll just go from the current price. You're looking at roughly about 58% and 101% respectively. ETH, again, we can't do this because it's been converted. So PhilG, this thing does look like it actually really wants to go back down to that support. So you can see the candle is currently below these candle lows here at 55 or roughly about 55, 56. So support again is 37 to 40. Of course, you guys are free to do what you want to with that. I mean, there is a lower support below here that you guys can see that I don't know how likely it is it's going to hit it because that was bear market lows, but I suppose if a black swan event happened, that could be possible. So 450 to 1250 there at the bottom. Again, I don't think that's likely. But if you got it at 450 and you rode it all the way up to these highs here, I mean, you'd be making like a 90x. So that is something to keep in mind. So anyways, from the current price to the swing highs, you're looking at roughly about 920% there, or I should say from that support to the swing highs. So GBET, this thing is actually, I don't need to look at the daily because you can see we have our first red candle close below here. So 460 to about 520 on that support there. And I'm going to flip this over into resistance. So then we'd be looking at $7.90 to about $10 and then $32 at the high there. I do suspect it's going to touch this support. It wouldn't surprise me if it happened because it just looks like it wants to do it. So first target, 113%. Second target, 584%. You guys can see, obviously, the lower these things go, the higher the return becomes when we do go into the bull market, or the second leg of it, I should say. So GLIV, it's kind of testing these lows. We'll see if it gets below there. If it does, it's likely going to come back down to at least $18, maybe down to 12 to 15. That would be support. And then the all-time high up there is at 80. So just to give you guys let you guys understand just how much more downside this could have, it could be about 44%. So not financial advice here, but if you guys don't have any cash on the side, well, I can't tell you what to do with your money. I will just say, if this was me and I was in this position now and I was looking to average down, I would average down, but I would also have some cash on the side in case this thing did sell off a cliff and just basically slump straight into support. So 548% move here. G-Link, so yeah, this one's interesting. It looks like it might come down below and go into this lower support. Let's take a look at the daily here and see what's going on. So no official close on the daily yet into that or below that support zone. So it is still acting as support. I'll give you guys this lower level anyways. So this is going to be 38 to about 45. But as of right now, the support still sits at 65 to 85. Keep in mind, we have 3 more trading days on this weekly candle, and the FOMC is tomorrow. They could come out and say something mega super dovish, and the markets could just go up like 5%. It's actually happened, believe it or not. I myself have watched the Dow Jones back during the pandemic go up and down, literally back to back, down 10%. You heard that right, 10% on an index in one day, and then reverse and go up 10% the next day. It was insane. So it's possible for the markets to go up 5% in one day. It's extremely rare. It almost never happens, but it is possible. So the all-time high up here at 220. I'll just measure from the bottom of the support. I don't know what your guys' average cost basis is and stuff. So 233% here to get back to the highs. Okay, so GSOL, this one doesn't actually look like it's pulling back a little bit. So I believe I have Solana here in the watch list. Where is Solana? Yeah, so Solana is pulling back a little bit. I suppose the thing about the Grayscale trust, I could be wrong about this. if you know the truth about this, go ahead and put it down in the comments below. But the Grayscale Trust does have these premiums. So I assume that the up and the downside, not just the upside, but the downside moves also are magnified above and beyond the native cryptocurrencies. So if the native goes up a little bit, then the trust goes up a lot, and vice versa, if you guys know what I'm saying. So I suspect that's what's going on here. I would be looking along this trend line for support. So anywhere between, basically, I'd say probably about 410 to 420, somewhere in there. And then the high up here at 580, again, I would personally not buy this unless it got back down here. So 172 to 200. But if I were to measure this, let's say from the trend line all the way up to the swing high up here, just that move alone is 37%. Again, pretty much any other Grayscale trust besides this one, in my opinion, is a better deal. We're looking for maximum upside here. That's what we're looking for. We're looking to make the most gains on any given position, the maximum alpha. So for you guys, you can do what you want, but that's what we're looking for. So 215% move here. GXLM, so this one is kind of really testing and pushing below kind of the support level here at, looks like roughly about 31-ish. So I suspect it is still going to come down and hit this white line. That's at 2460. I'll just call it 25. So you have resistance here at 5260 to 5860. And then the swing high up there at 69.5. So once we get the pullback from here, we'll just measure it, and you'd be looking at roughly about 136 to 179%. Mana, we don't actually, I could be mistaken. I believe we don't have mana anymore, but if we do pick it up, we will definitely, if these things really capitulate, we'll definitely be taking a look at picking up a lot more kind of AI, DeepIn, metaverse, those kinds of things in the crypto space. So in terms of the trust, we did get a confirmed candle below support here, and then we're having another one. So this white line is kind of the next level of support here. This is going to be roughly about 1070. I'll just say $11. Below that, you guys can see this support all the way over here. So I'm going to zoom out real quick so you guys can see this. In case you guys are wondering what the next zone is. So it's $1.66 all the way to $3.37. That's incredibly dirt cheap. I would be willing to throw a huge amount of money into this trust if it got down to those lows. Absolutely, I'd be piling in like a beast if I see something like that. So $70 all the way up here at the high. I'm actually going to change this to resistance. Honest to God, did not think it was going to get down below here, but this is trading and investing. You never know what's going to happen, and crypto even more so. So 1750 to 20.25 here. Give you guys the measured move. In my opinion, mana is pretty much perfectly positioned to bounce. If it doesn't bounce from this point, it'll probably go to the support level here, but it kind of depends on what the Fed says. So 91% on the first move here, and then from that point, 539%. So before I go into the last trust, I can give you guys, if you guys are worried that it might go a little bit lower, I can give you guys a couple of ideas here. Whether you guys choose to implement these or not, that's entirely up to you. These are different strategies that we have used. And again, it's up to you whether you want to do it or not. So let's say I got my position, let's say up here at this trend line, right? Because I thought it was going to break out, and I'm like, oh crap, it's going down. So I go ahead and DCA money in, get my average cost basis down, and maybe expect a bounce right here, right? So basically what I do is I would do this as a double play. So I would DCA all the way down, DCA when it's in support, but I would also have some cash on the side on the flip side. So basically DCA into this expecting a breakout, but have cash on the flip side in case it goes lower. And then what I would do is I would start buying more when it got down to this lower support level, either by basically bulk buying, like let's say put a few $100s in at a time every time it touches the zone, or just DCA as long as it's sitting around that area. That way you kind of have a double hedge, so to speak. You have, your skin in the game in case it goes up, but you have cash on the side or cash equivalent, something like that, dry powder on the side to put into the market in case it goes down. And the inverse could also be true. Okay. So if, let's say I was, positioned here in the market, I started out positioning here, the market starts moving up. I basically say, okay, well, let's maybe move this trend line here, and I'll say, I will DCA into this thing until it breaks out, and then I will stop. And when it breaks out, I'll just simply hold my position. I'm not going to add anymore. But on the flip side, I'll go over to, let's say, some kind of dividend paying stock or ETF, and I will put the cash into that to get put to work to produce some kind of passive income. That's what's known as a hedge trade. Now, generally speaking, I don't do that with these Grayscale trusts, but I'm just pointing that out to you guys in case you guys want to get a more complicated strategy. That's something to think about. Whether you guys do something like that or not, it's up to you. One way that we do kind of hedge our positions is, like, for example, the dividend capture strategy that we have, where we're basically, if something's in profit, if it's in profit enough, meaning it has to be substantially in profit, okay? It could be like $10, $20, $50 or more. On any given position, we'll basically take the profit off the top plus somewhere between 5 to 10% of the initial capital invested, and move that 5 to 10% of the initial capital plus the profit and put it in another position that's basically in a drawdown. And then we'll rebuy back into the old position at roughly about 90 to 95% of the previous cost basis. That's a good way to think about a hedge. So anyways, just wanted to throw that out there. Again, you guys can do what you want to with that. So Zcash looks like it's maybe wanting to get down below this level of support here, although it's I think it's a little bit early to say. Again, we need to wait and see a close here on the daily. We have not seen that yet. So if it does get a close below, probably going to be looking at this white line again as your kind of buying area, roughly about 315, 320, somewhere in there. If you guys want to know the level below that, it's $1.61 to about $2.90. And then resistance up here, 8 to about 960. And then I believe you have 10 and a quarter all the way at the top. Yep, roughly about 10 and a quarter. So as of right now, you'd be looking at roughly about 125% and then 137% respectively on Zcash. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.